Hey guys, thanks for jumping in. This is Wayne again with another episode of Mining Gems. And I know you hear me talk about infinite banking a lot and some of my colleagues, but I wanted to give you a customer perspective. So brought Blais along to just kind of add some insight to the conversation because he is a advocate of infinite banking, as you'll come to find out, and just wanted you to hear it from the other side of the table. So, Blaze, thanks for jumping on, man. I really appreciate your time.
Absolutely. Thanks for having me, Wayne.
I know you're a little under the weather, so I'll be brief as I can. Obviously, we want to give it the respect that it's due, but be brief as possible so we can get you back to taking care of yourself. But I wanted to start with, if memory serves me correctly, when we were introduced, you already had some understanding of infinite banking and kind of just needed to close the gap. So take me back to what you knew and what attracted you to this strategy
Well,
overall?
I knew there was policies out there where you can earn cash value a lot faster than normal. Like I have friends that have to wait 5 years before they can pull their cash value out or take loans against it. And I knew that was wrong. I knew there was policies out there that were 30 days or less. And I mean, us meeting was kind of a freak accident. I mean, Benedict called me and kind of the rest is history. And the policy that you provided me, I have a 14 business day turnaround from the time I put the money in to the time I loan it back to myself. And it's, what is it, almost 90%? It's almost 90% of what you put in goes to cash value. So it's a really fast method. I mean, you're going to pay off 50 grand of debt, run it through a life insurance policy first. You're trading your interest rates and then you're getting a nice pay down on that, the interest you traded for. So you would go from that like 29% down to the 6.5, and then you get another 5.65 on top of that. So you're realistically only paying 1.5% interest on that money, and then it'll just grow every year. And so it makes much more sense for me to pay off the debt through the life insurance policy versus just paying the debt off and being out the money. Like, yeah, you don't have a debt anymore, but you're also out the 50 grand. Whereas in my case, that 50 grand will be earning interest for the rest of my life.
You
Yeah.
just said a lot and you glazed over a lot of things that I would typically spend really an entire reel, an entire 3-5 minutes talking through. So I wanna kind of go back to, you knew it was out there. How were you introduced to the strategy? I know you said 5 years versus 14 business days. So did you know somebody that was using the strategy or did you stumble upon it on YouTube?
I've just read a lot of books about it. I did see a
Okay.
YouTube video and kind of re-sparked my interest. And then I started looking for policies.
Okay. So you knew about it, kind of forgot about it because you couldn't find what you were looking for, and then saw a video that reignited that interest and then kind of went down the rabbit hole until it led you to me.
Yeah.
Okay, cool. What are some of those books, just out of curiosity?
Richest Man in Babylon. It's a great book.
It is.
It's a great book if anybody's not read it. There's some other ones that I can mention, but it was mainly YouTube videos that I was seeing the infinite banking on.
Okay. And that's pretty common. A lot of people, especially now with the way it's marketed, are digesting those YouTube videos where it talks about accessing your money and cash value life insurance. And to be quite honest, I liken it to culturized meat in the way that they're labeling the lab grown meat now, because they're being generic on purpose and saying
Mhm.
things like cash value life insurance because they know once they get you to the table, they can hit those points where you don't really have to have an understanding, where somebody like yourself saw through it and just kept looking. If they hit those points, then you'll buy. And that's what's scary to me. But you knew that there was something else out there as you digested those videos and continued to look. And you talked about also one of my favorite strategies, and that's playing the points game, which the wealthy do at a very high level when they leverage things and pay cash for things and move money over here for an extra point. And that compounds over time, which is one of the attractions here. But you talked about the debt strategy. And I know that that's one of the things that we talked about when we fitted you, because it's custom fitted you for this policy. So dig a little deeper into, if as personal as you want, what you were looking at and how this fit into that box, or how this helped you accomplish that goal more quickly.
Well, I wouldn't say it helps you accomplish the goal quicker, but it allows you to make interest on the money that you're otherwise going to spend anyways. So if you have 50 grand to pay off and you pay it off and you're out the money, you no longer have the debt. Whereas if you have the policy, you're earning a steady interest rate on that money. And then the policy, how it's structured, you don't actually have to put $50,000 in. You only have to put five. So it's a lot bigger difference. But the more you put in, the more you get out of it. After we go through the debt cycle and paying off all the debt, credit cards, cars, then we move into borrowing the money to either put into, you know, dividend stocks or, invest to other people. For instance, like transactional lending, if you collect points in between. But the money you can earn on both sides of it because you can take a loan against it. And just because you took your loan this whole year, well, next year you're going to fill it up again, and it's also earning interest on the money you already put in. So it's just a good vehicle. And then later on in life, you can buy a house with it, you can buy a car with it. There's a lot of things that you can use the money for instead of having to go to a bank and getting a large interest rate.
Yeah. No, a lot of times when the concept is called infinite banking, becoming your own bank, and it's just a matter of when. Like, do you want to do it this month or do you want to do it in 5 years? And I think
Right.
you said that beautifully earlier when you were talking about your search for this product. And what I like to tell people is really all we're doing is changing where the money goes first. And it goes to your policy first, like you said, because now you're earning on that money. And one of the things that I think gets overlooked is you're going to spend the money anyway. And after you get done paying off your debt, and this is why it works at every level, after you get done paying off your debt, you are going to replenish the money anyway too, because you weren't just going to give up on life and pack it in and say, hey, I checked this box and just forget about everything else, every other goal that you have. You were going to replenish it and then do other things. And I think one of my favorite things to do, like I said, is to use it to pay off debt, not faster, like I said, and thank you for correcting me. It's just a more efficient way to manage and pay it off. And then once it's paid off, now you can look to do other things, put it into stocks. And now it's arbitrage on top of arbitrage. Instead of buying down debt, now you're just really compounding it and having your money work for you in multiple places.
And I
So
think the real goal of it is when I'm, about 50 years old, I want to be making 100 grand a year in just dividends. Like my dad's 50, he works a job 40 hours a week and he makes about 100 grand. I'm like, if I can have a policy that's paying me $100,000 a year, that is essentially that same job. And you can retire early on something like that. Maybe not, you know, 25 years from now, but
yeah, it's kind of like when you know better, you do better.
right.
And I honestly had this conversation with a client yesterday. We were doing her annual review, and somebody told her, some expert that she consulted on infinite banking. They have this great landing page. They wrote a book, this great system behind them. And he said to her, "Why would you put a 20-year rider on it, and you can just put a 7-year rider on it and accomplish the same goal?" And I was like, No, you can't." Because if you only put a 7-year rider on it, then that means you can only put that money in there for 7 years. And then you got to find either you got to get another policy or you got to find something else to do with that money where it's not necessarily working for you. And he said, well, you're putting yourself on the hook for $12,000. And it speaks directly to what you just said. It's like, but why wouldn't you pay that $12,000 if it's securing a dividend of 100,000 plus? And that's down the line. But
Right.
even when we looked at her policy in year 7, if she funds it the way that we structured it, even in year 7, from that point on, her dividend in that year was $27,000. And again, hasn't missed a dividend payment in 120 years. So that dividend is going to be there. So again, I said, go back and ask him, why wouldn't I pay the $12,000 if it's securing me a compound dividend of 27,000 that year, and then every year it's going to continue to go up just because I put the 12 in.
Mhm.
Like, who's not going to give somebody 12,000 if they're getting 27 plus back every year for the rest of their life?
Right. And
So
it goes up. I think if you look at your schedule from 50 to 75, it'll go up drastically. Like the amount of money that you accumulate is drastic, and then you're leaving your family with wealth, with real wealth, depending on how much you put in those policies.
yeah, and you said something before that I forgot to go back to. A lot of times people are, and these are people from the other side, they get caught up in that vehicle that you saw and say, yeah, that's cool, but that's not what I'm looking for. A lot of times people say, well, what's the least amount I can put into it? And that's the absolute wrong way to look at it, because all we're doing is putting our money to work. And it really should be, how much money can I put to work here? Because again, you're going to spend it anyway. How much money can I put to work here before I spend it, so that it's creating that compounding effect? Because the more that you put there, the more the dividend is, the more that it grows from year to year. So that when you get to that place at 50, and I won't tell your age now, when you get to that place at 50, now it's still growing because you're making this small payment, but it's the compounding, just like anything else, of the efforts that you put in early on. It's just like if you do 5 push-ups a day for the next 5 years, you're inevitably going to get stronger, because the 5 push-ups today is going to compound on the 5 push-ups at day 7, at day 14, so on and so forth. And it's
Right.
going to create this snowball effect where it's just growing
Mhm.
constantly and consistently.
I think another like missed factor of life insurance, what people don't realize is like when we're looking at like higher wealth people, when they're going to get loans, like my friend just got a SBA loan, probably in the millions. He has a life insurance policy about 1.2 million that backs that up. So
Hmm.
you can use it as collateral against the loan itself, and it gives you access to get this money, and it makes the banks feel much better because it's like, well, if he dies, then the money comes to us, and they just set up a trust correctly. So everything pays out in the order it's supposed to. So not only can you make money off your dividends, but you can also make money off the death benefit itself.
Absolutely. It's the difference between buying life insurance and acquiring a resource that you can leverage. It's kind of like when people say they pay cash for something, very rarely do people really pay cash for things. They're either, in this case, leveraging the insurance policy, leveraging the equity in their house, or leveraging a brokerage account, getting a security based line of credit. But very rarely are they paying cash. They're doing something, they're leveraging something that they established an asset that they don't have to disrupt the growth of, but they can use it to continue to acquire assets or continue to put them in a more favorable situation, buying down debt or what have you.
Mhm.
So it's really, and I always say this, it's really the greatest thing hidden in plain sight.
Yeah, it's
So
absolutely a great tool. And I would recommend anybody get started. The earlier, the better. If you know anything about the rule of 72, if you don't, look it up. But the earlier you start, the better, the more times it will double.
absolutely. And I know people are going to look at this and think this is staged, and Blais is
Staged.
somebody that I worked with through this. I honestly, after having a conversation with him from the first conversation we had, suggested that he get licensed, because there aren't enough people in this space having this conversation, because they're chasing the bag and not truly trying to put people in a better situation, and still think that he should get an insurance license. But he is not licensed. He has never been educated on insurance at all. He just sought something to fulfill a need that he had, and as a byproduct, just developed an understanding of it. And again, obviously, people look at me, and this is a conversation that I have day in and day out, which is why I asked him to jump on, so that I could bring his situation, his testimonial, however you want to slice it, bring it to you firsthand so that you could hear it from your side of the table, from somebody that's sitting where you're sitting, and understand that it's a custom solution that can be fit to anyone's lifestyle, regardless of your socioeconomic status, whatever level you're on. It just requires you to think about things a little differently. And it's by design, to
Mhm.
be honest. So, Blaze, any closing thoughts for anybody that might be listening or come across this video?
I would look into getting a life insurance policy. I'd look into finding something that works for you in your situation. Even if you don't have debts to pay off, it's a really good tool that you can actually accumulate wealth in. And when it comes time to buy your son or daughter a car, you can loan against it. When it comes down to buy a new house, you can loan against it for your down payment. There's a bunch of other options for it. I really think just the everyday person should have a good policy that they're putting money into because you're going to earn a lot more interest than you would a bank, a lot more.
Yep.
So,
And it's tax free.
and it's tax
And
free.
those are all things that you were going to do anyway. And because it's life insurance, if you aren't around to do those things, which is why most people look at life insurance, then those things are going to happen anyway, because now you created this tax-free windfall that truly does generate wealth. So, Blaze, I can't thank you enough for jumping on,
Yeah,
and
absolutely.
I I greatly appreciate the trust and consideration that you placed in me, and allowing me to work with you, and look forward to watching you grow and continue to leverage and use this policy, man. I appreciate it.
Absolutely. I really like the policy. It's doing very, very well.
Very good, man. You take care, and we'll talk soon.
Okay.